A6.2 VAT, Supply of Land and Buildings in the UK. In this video, we will look at the VAT rules concerning the supply of land and buildings in the UK by either sale or rent. The general rule for the supply of land and buildings in the UK is that it is exempt from VAT, so that is your starting point in any question. There are, however, 3 exceptions to this rule to watch out for. First, the sale of a new commercial building. By new we mean less than 3 years old, which would be standard rated rather than exempt. Second, the sale of a brand new residence. This can either have been built from scratch or converted from a non-residential property, or a building to be used for charitable purposes, which would be 0 rated. And third, services for a qualifying conversion of a residential property, such as converting a house into 2 flats, which would be reduced rated. There is an option available only for the sale or rent of commercial property or land, which would turn an exempt supply into a standard rated supply. By doing this, the seller or landlord would need to charge VAT on the sale or rent of the property or land to the purchaser or tenant. This may or may not have a negative impact on that party, depending on whether they themselves are VAT registered and making taxable supplies or not. If they are, they would be able to reclaim this VAT back as input tax anyway, so the net cost to them would be the same. If they were not VAT registered or not making taxable supplies themselves, then this treatment would represent a significant increase in the cost to the end user. The reason a business might want to opt to tax, though, is that if the supply is now taxable rather than exempt, it means the seller or landlord can now reclaim any input VAT in connection with that land or property. The option to tax can be made on a property-by-property basis, but not for parts of buildings. The election is irrevocable apart from in the first 6 months and after 20 years has passed. A couple of other land and buildings VAT issues to be aware of are that where we are looking at the transfer of a going concern in order to include a land or building as part of that transfer, and therefore avoid VAT being charged on the transfer, as remember there's no VAT on the transfer of a going concern, the new owner must agree to opt to tax the property or land going forward. With regards to stamp duty land tax calculations, be aware that you would include any VAT applicable in the amount of the consideration that the purchaser is chargeable to tax on. This is whether or not the purchaser can recover the input VAT.